Good morning, Paul Georgie from Allendale. It's December 13th, Friday morning, and grain markets giving us a little more follow-through selling here this morning. And we have to go back to yesterday to get the reason for some of this selling. We had a positive export sales report. It seemed like a buy the rumor, sell the fact. As soon as the report came out, the market started coming under pressure, and the trade was trying to figure out why the new or recirculation of old news seemed to be the key, as the talk of cancellations from China on corn, and now there's more serious talk, no confirmation as of yet, that China may be canceling some of the DDGs that they purchased and doing testing on it for the GMO strain that they say is contaminated corn. So that is compounding some problems for the soybean complex, as DDGs can be used to replace protein sources here in the U.S. and could create some lack of demand, less need for soybean meal, and that in turn put pressure on soybean meal. So once these news stories came out, we've seen the high frequency or algorithm traders look at these headlines and sell the market. So that sets the stage of where we are today. Will we see more of that action today? News stories are extremely limited here this morning. We could see some more technical selling, as the reversal days yesterday in corn and beans could carry over into today's session. We've got expiration of the December contracts today at the Board of Trade, the corn, meal, and bean oil and wheat. That could put some pressure on the market here, as those contracts have narrowed. That spreads between the Dece and the March in corn, for instance, could create some volatility going into that expiration here at 12 noon. Other news: Farm Bill negotiators say that it is likely they will come up with a plan here in early January. They feel confident of that. We'll see. The struggle is two parties are still fairly far apart. Basis in the interior here in the Midwest in terminals were steady yesterday with the sell-off in the grains. However, we did see some pressure on basis in the western Corn Belt and along the river. So starting to see some movement of grain there, filling some needs, and processors, end users are starting to back some bids off already. The other news, I think we've got to look at the markets on the technical basis. Where are we at here today? We've got support in corn. We've still got a 2-week uptrend going in corn. We need to hold this market anywhere from against yesterday's lows, actually, is a key support area there, and the same in soybeans. Any further selling in soybeans could give us some pressure as we go into the close here today. The livestock markets struggling with the demand of product. The cutout values yesterday were lower. We had beef lower, and choice was down 105. Select was down 20 cents. Pork cutout values were down $2.27 yesterday. So an indication of struggling demand. This demand problem is causing packer margins to be even deeper in the red for the cattle, and a real standoff in the country right now with tight supplies and lack of product demand on the other end. The packers are not willing to pay up. So we'll see who shows their hand here today. Bids are around 130 in the for the cattle, with offers at 133. So hopefully a steady market can develop there at this 132 area in the live cattle. In the pork complex, the December contract goes off the board today. We've got the hog weights continue to set record heavy weights coming out of Iowa, Minnesota. Demand for the product at the retail counter is sluggish right now. We may see some fill-in buying here early next week as we go into the Christmas holiday, but still a very concern about the demand side of the equation there. The PED virus cases continue to mount. We had the last reporting week increased 140 cases. We still haven't seen any effect on the supply of hogs coming to market, although much of this is being offset by larger weights of hogs. But the feeder pig market continues to be very hot. Producers looking for supplies of feeder pigs to fill their needs, and we are seeing some effect there. So there is some things going on. Still a reason to stay in touch with Allendale's research. You can get us right online, subscribe to the Allendale Advisory Report, or just call one of Allendale's representatives. We'd be happy to answer any questions you got. You can reach us at 800-262-7538. We wish everybody a very successful trading day, a safe weekend, and we will talk to you on Monday morning. Thank you.